we're looking at like a net new way of underwriting. Like we're like the big picture idea is actually just letting more people like participate in the economy.
We can ship out features a lot faster, even on the UI side. Like nowadays, there's like Adyan's a big proponent of like bold. It's like you can just like come up with like prototypes like really quickly on the front end, especially. And so it's like a lot faster to get things done these days.
You go in, you make some connections. Like a lot of like my ex boss, for example, like first VC firm I worked at, like he's coming in as like an angel, right? And like those connections are incredibly like resourceful.
To start off, I just want to ask, like, how did you guys initially meet and like start working together?
Do you want to dive into it? Yeah, rip through it, man.
Yeah, I was like so I've previously worked in like Fintech, and I was trying to get a bit more into the prop tech side. So I'd been to a few networking events, and I met Adyan at one of those, and like he seemed interesting. He was working on something cool, and then like I was also studying like business at the time, so it took a while. But after that, I saw that like there was an opportunity to join like as on the tech side, so it seemed like a good fit.
I seemed interesting. I'm not very interesting. I would say personality is pretty bland.
So then how did you guys get the inspiration of starting Cove and like dealing with the problem with tenant verification?
So I used to work at like Neo, which is pretty big like FI in Canada. And you know, I was in like open banking and like just like fintech and open data for like a while now. Worked at like a family office. I was in VC for a little bit, worked at Storytime Capital, and one of the partners there was Ryan Kimmel. And Ryan owns like about 40,000 rental units, which is a lot. Like he's a pretty big property manager, asset manager. And then my dad, who had like 14 units, had like the exact same problems as Ryan, which was like when you have a tenant come through and apply for a rental property, it's really hard to actually go and like verify their information and like streamline this entire like leasing process, right? Multi-step process, very, very redundant, very old school. A lot of like emails back and forth with the tenant and like a lot of just like chitter chatter before you actually figure out who's the right fit for the rental property. And the biggest problem that both of them had was like fraud, like people coming in, submitting fake documents, coming in and like defaulting on the rent payments, like on average losing $30,000, $50,000 per unit. Dad had the exact same issue on his first rental unit that he listed out using a real estate agent. So I sort of went back to like my Neo experience and I was like, cool, like we can use a lot of the stuff that's already out there, like open data and open banking, to actually go and create like a very robust screening process that goes beyond background and credit scores and all these other companies that are in our exact same space. They're not leveraging open data as much, right? But as we built at Cove as like a tenant screening company and we went deeper into like this real estate vertical, like we became like the official tenant screening partner for the Toronto Real Estate Board. We won over like a ton of brokerages and property managers. We sort of sat down and like asked ourselves like, what is the bigger problem in the space? Because at the end of the day, like Cove's tenant screening product, there's a lot of like financial technology infrastructure that we were building. But at the same time, like we weren't creating anything net new. It was really just like a wrapper around all of these existing products that were out there. So we asked ourselves like, okay, we built this for like real estate and tenant screening, but like who else could use this, right? Because the property managers that were using us, like initially they were accepting people with like a 700 credit score, but then they started using us and they're accepting people with like a 650 credit score or 600 credit score. And that obviously increases like the velocity of applicants that come in and apply to a rental property because you're approving more people because you have more data points on them, right? So when I'm looking at you, Angelina, as a tenant, I'm not just looking at your credit score, which could be bad. You know, you go through a divorce, you go through a messy time, you crash your credit score. I'm looking at your on-time rent payments that you've been making for the past 4 years, or I'm looking at like your on-time utility bills, right? Or I'm looking at like the stability of your job, for example. You've held this job as a product manager for the past 4 years. I'm looking at that rather than like a credit score, which isn't really indicative of like someone's financial background. So we took that and sort of expanded it to a ton of other verticals. Like we looked into mortgage pre-qualification and insurtech and like auto lending. And now that's where sort of the future of the company is heading, of like building this like fintech Zapier style platform where any SMB or enterprise company can go and actually create these very simple workflows that use fintech and just streamline their standard operating processes, whether it's like checking for a rental property, whether it's like lending someone a car, everything is powered by fintech.
Yeah, so in a sense, you're almost kind of lowering the barrier to entry a bit by having a more broad way of screening tenants.
We're looking at like a net new way of underwriting. Like we're like the big picture idea is actually just letting more people like participate in the economy, because the next like 10 years, finance is going through a major change. Like fintech and finance and all this stuff, like it's going through a major change, and you need a lot of knowledge and understanding of like how the thing works to actually go and use it. And these SMBs or any of these like property managers or auto lenders or any of these folks, it's not their core business model. Like a property manager's core business model isn't building out financial infrastructure or any of that stuff. Their core business is actually just getting you into a rental property. They don't have the time or the patience or the money to go and do this. But if they start using fintech to actually go and create better underwriting processes, then 110%, their business growth is going to be crazy because now they're accepting a lot of new applicants. There's lower vacancy rates, there's faster leasing cycles. And that exact same philosophy can now be applied to like a ton of other industries where you're basically lending something out, right? Like the way that we look at property management or rentals is I'm giving you this apartment and then you're paying me like an interest rate on it, whatever. You're paying me a premium on it, which is rent every month. The same way if you took out like an auto loan from me for a car, I'm giving you the car, but then every month you're making a bill payment to me. So it's the exact same thing for a ton of other verticals.
I want to go back a bit to 2023. So I read an article that you wrote on Medium about rebranding from Rentkeeper to Cove. So I was kind of wondering like about that rebrand, like why did that happen?
Yeah. We were trying to solve like a completely like different problem. That was before I met Cyril, and like he sort of showed me like the possibilities that you could go and create with like fintech and open banking. Like I'll let him touch more on his background right after this, but like his background was like fundamental to that change. Rentkeeper was like property management software. If you know like Wave Accounting's model was like giving away free accounting software to like SMBs, and then they made additional revenue sources off of like ancillary stuff like processing payments, invoices, like payment processing, all that stuff. And we try to adopt like the Wave accounting model for property management software by giving like SMB property managers like free PMS software that helped them with like managing the rentals, taking in applicants and all that stuff. And we gave it to them for free. And then we tried to make money off of ancillary revenue sources. But like the only thing that actually made any money was like the screening thing, right? And at that time, it was like a background check and a credit report. So I was like, let's just dig deeper into like the screening thing and like figure out how we can create like a market opportunity for ourselves. And Cyril, obviously, he played a pivotal part in that because I'll let him talk about that stuff and UPI.
Yeah, so like I had moved from India to over here, and like in India, there's this huge thing around UPI. So it's like mobile payments for the most part, but there's like this whole infrastructure built by the government where all the banks like work with a standardized API, and like all the data is like collected, and like people can do payments with an API. So there's like new startups which basically started like letting you do payments on mobile. So there was like Google Pay, there was one called Phone Pay, and they had completely changed the system there and like digitized the whole stack. And it's like called the India stack, and it's like the new soft power thing out of India. So I saw that, and then I come to Canada, and it's like there's no open banking, and even like my credit scores don't transfer. So I had like an 800 credit score there, and I come here and I don't have a credit score. It's like really hard. Like even like finding a rental, you need like all this credit history, all that stuff. I was like, this is a problem that needs to be solved. So I was like, yeah, let's focus on this thing.
And maybe like touch on your background as well. Like
So
market feed.
So I was working at as an engineer at like a market feed, which was a YC company, and it was like fintech, and the objective there was like democratizing like trading. So like if you are like a trader trading derivatives, you can make a lot of money, especially in the Indian market because it's kind of booming right now. And there's not that many traders compared to like the more developed like markets like in North America. So it's like, so that was the objective. And I was like building a lot of integrations there. So over here, it's like, there's like Flings or Plaid, which is like building integrations on top of like the existing banks' websites and things like that. So we were doing the same thing with like exchanges. So like securities exchanges and things like that. So I was like, yeah, we could do a lot more here, like using the existing infrastructure, and we can build a lot more because of my experience there. So
what struck me about Cyril when I first met him, though, was that he wanted to work on this idea with me, not because he loved the space, but because he hated it.
Oh,
like this is too much. Like the whole real estate space and like even like finance, right? And like the banking sector, it's like so stagnant. There's no innovation. All the innovation seems to be in like AI and tech and all that. So I was like, let's go in the opposite direction, because like on the other side, everyone's competing. All the smart people are there. Here, it's like stagnant. So let's just go. There'll be so much value because like nobody is really innovating. So I was like, yeah, let's go fix this space.
Yeah, so you wanted to make a difference because like yeah, that's interesting though, because like usually it's the other way around. But yeah.
Yeah. You got to go where no one's going. Right?
Like most people will say like do what you love. Like Cyril's like, philosophy is like do what you hate and then just like work endlessly at it.
Kind
Yeah, like different type of motivation.
Exactly.
Yeah. Were there any like lessons you guys kind of learned from the rebrand?
We saw like a ton of founders like just keep building and building and building. And I think the rebrand and any of like the stuff that we've done from like Rentkeeper to Cove, tenant screening to like Cove's future, just came back to like talking to your customers like enough and like really obsessing over like the problem. Um, we see a lot of founders, they build in like Next for like 12 to 16 months and they'll go to market right after that, after they've built a product and they've done all of this stuff. And they realize like, hey, no one actually wants to buy my thing, right? And like they just keep engineering and engineering, and that's the biggest problem with like a lot of startups as well. That's why they run out of capital, is because they spend so much time building, they spend so many of their resources going and building a product and making it perfect, and then trying to take it to market, and then boom, like no one wants your thing, and you run out of money, and then you have to keep raising more money, or most of them they don't even get the chance after that, right? Versus we sort of took an opposite approach of like overselling. So instead of overbuilding, overselling, because when you're engineering, and Cyril obviously knows this a lot better than me, but like when you're engineering, you have like technical debt, meaning you're going and you're building a product and then you have all these features, you have all these things going on, and there's a lot of things in the back end that could go wrong as well. And you're just quickly building, right? And then you take it to market and then boom, no one wants it. You have to go change it and all of that stuff, right? Versus our approach was like, we were limited on resources. He's the technical one. I'm not as technical as him, so I can't really build a product. So we're very strapped for resources. Like a lot of founders and companies like have either like two co-founders that are both technical and they can quickly push out a product, but I wasn't as technical. So we're like, okay, we're already strapped for resources, right? So how do we sort of tackle this problem? Our approach was like overselling and like just going to market immediately without even a product and like having a very, very like DIY, like hacky product. Like I had an intern before Cyril came on. Like we just took that to market. We didn't spend that much money on it, but we got like revenue, we got validation, we got to talk to a customer. And even though like it broke a ton of times, like we lost a ton of customers because the product would break, whatever, we just keep revisiting them every 2 months and be like, okay, this is where it's at now. And they try it and then it'd break again. And then 2 months after that. And then, you sort of pick up momentum. But like we did that because every time we would go and try to sell something to someone, even though we would break, we would still get revenue from that. We'd still get validation. We'd still like learn more about the problem, right? So having those like quick iteration cycles was super important.
So it was about kind of like constantly interacting with customers, whereas you said some people they would spend all this time to make a product first and then realize that it wasn't working.
You have to obsess over like the customers and like the problem rather than obsessing over the technology, because the technology, like with AI and all this stuff, like the technology is going to become a commodity, right? Like it's going to become like very cheap to go build a product in like 5 years. Like anyone will be able to go and launch a product, right? So now like the biggest problem that like a lot of companies will have is like distribution. Like how do I actually get people to like buy this product? Because there's like no barrier to entry to creating software. Everyone is going to be going creating software, right? Like that's kind of like our thing as well with tenant screening and like this entire market. Like because there's going to be more and more tenant screening companies over the next few years, property managers are going to have a harder time choosing between them. So we were like, instead of creating like another tenant screening company, let's just create a way for anyone to go and create the product that they're looking for, whether in property management, whether they're in mortgages, whatever. Let's just create one platform that like everyone can use instead of these like verticalized solutions like tenant screening, mortgage pre-qualification. Because there's companies that are operating in just these verticals and that's like the only thing they do, but there's a commonality across all of them. It's the same thing for tech, right? It's like once you crack that like distribution hack, then you're going to be winning. But like having a technical moat or any of that stuff over like the next few years isn't going to be as big.
Okay, yeah, great. So I want to now go into kind of your process of building Cove. So how did you guys initially go from like just having this idea to kind of the action of actually like making the software and making this happen?
Like I can tell you the scrappy version and then still can tell you about building it because I have no idea when it comes to like building it. Like I'm the worst when it comes to that. My thing was like, like bubble.io?
No, what is that?
No code, like just drag and drop thing, right? So it's like, it's kind of like Wix or like Frame or any of that stuff, but it's used for building like web apps, right? It's very bad. It's very, very, very bad, but like it's good enough to where like you can kind of just put something together. So my like MVP to the market was literally just like a bubble.io like forums app that had like tenant screening, and I would just cold call realtors. And at one point I was actually just doing like screenings myself. Like I would go and like research the applicant and like just put together like a little report on them. And then after that, there's a point where we would go and take our competitors' tenant screening report that had background and credit. We would enter in the person's information. generate that report and then just like slap our logo on top of it and then try to sell it for like $30 more than them, right? And like at that point, like that was the only thing that was working because like I wasn't technical enough to go build the whole product myself or any of that stuff, right? And then hired an intern. We got some like initial revenue off of it, like literally by any means necessary, just like launching and like working towards like actually having a product. And then hired an intern, like paid him something every month. And then we actually built like an MVP. And that was like a full stack like solution. But even then it was like very, very laggy. It was super bad. Like it was super slow. Things would crash all the time. And then Cyril came in and like he refactored the entire code base. And then he can talk about like actually building it now.
Well, my experience, like taking action, I'd say like, so I had run like a startup of my own a few years ago. But the problem for like technical people is that we can write code. So we'll just be like, okay, let's just start writing code. This is what I did. And we never do talking to the customers or trying to sell it. We'll be like, okay, let's like make it good enough. And then after that, we like, I would try a bit trying to get like customers and the reactions initially obviously are going to be like really bad. So it just feels so easy to just keep tweaking things and you're like never actually putting things out there. So I feel like there needs to be the balance between like building something and like talking to customers. So it's just like those two things that you have to do. Just build something and talk to customers and keep that going. And that's how you like start like taking action. Yeah. What was the other bit?
And like the thing doesn't matter. Like the thing that you build like doesn't matter because it's like you just need something to like give to someone. Like you shouldn't obsess over like taking something to market. Like you should obsess over like just getting something in front of them and then figure out everything else after.
Yeah. So I like the strategy we were doing. We're like just selling them stuff and then we kind of build it at the same time. Yeah.
Yeah. So kind of going back into what you were saying, like it's more just about constantly interacting with customers and then kind of fixing it like that, like then and there, as opposed to spending all that time just building the product and then not really knowing how like the user experience would be.
Yeah. And, like the biggest thing though is like being scrappy. Like you have to be very, very, very scrappy. Like we were so scrappy to the point where like we were literally using our competitor's product and then just doing a little bit more work on top of it. And all of it was very manual. And then like eventually like you automate, you do all these things, like you improve the product over time. But like initially, like it's okay to suck. Like it's very, very okay to suck because like startups always have this pressure on them. Like, oh, you're going to go like do a ton of innovative stuff. You're on the brink of innovation. You're like this big company that's going to make it. But like initially you have very limited resources. Like you don't have the capital or any of the experience or any of that stuff to actually go do any of this stuff. Right. So you kind of just have to like make do with what you have and just like keep going after it. Like just don't stop doing it. And then eventually like it sort of snowballs, right? And it turns into like a bigger company and everything's automated and all that stuff. But like in the earlier days, like it's completely fine to like say you're a software company and in the back end, like everything is manual. Even Amazon did that. Like if you look at like Amazon's thing, they had like a grocery store and they said like AI would like watch you check it out, like the groceries, and you could just come in, you could take whatever you want and then get out. In the peak, and there wasn't any AI. They actually had like a call center of like, I don't know, 1,000 or so like people in India, and like all of them were just watching you like check out and like all that stuff, right? So okay, because then they're able to get like the idea out, right? Of like this is possible.
It's supposed to. So if you don't like Paul Graham from YC, like he had this whole essay, like do things that don't scale. Because you're a startup, you have to like initially you have to do things. You don't have resources. Just do it manually. Just get the product, get the customers, and then you build the tech. Like we start building the tech, it's not a good recipe. Yeah.
How did you guys decide on which features and functionalities were most essential to your product?
Still a question?
Talking to customers.
Yeah, just talking to customers.
Yeah, just have bit of an idea of what we're building at the start and then just start building something and just sell it, see what
like this entire pivot that just happened from like the screening thing over to like this like Zapier fintech thing. It's only happened because we talked to our customers enough and like we just built something and you just keep asking yourself like who else could use this? Like what else could this solve? Right. And then if you like stay in that iteration cycle and you're like very open-minded to like different possibilities, like what your thing can do, then that's amazing. But like you shouldn't pour like as much like focus or like pressure on like engineering like net new things. You should like create a product because that's what a product is, right? Like that's the difference between like a product and a consultancy is like they're both like tech companies, right? Like consultants and like whatever, like your SaaS companies, like they're both tech companies. But the difference between like consultancies and like SaaS companies is that when you have a SaaS company, you just keep asking yourself like, what's the problem? What's the problem? What's the problem? And if you have a really good startup, you're gonna have one problem that's common across a ton of industries. And then you focus on building that core product rather than like building net new products for every single other industry. So like all the other verticals that we're looking at, whether it's like auto lenders or mortgages or like I don't know, like leasing equipment or any of that stuff, we're still selling them like the same thing that we sold to property managers. We're just telling them like, hey, you could actually use this for like XYZ as well.
Yeah. Could you guys kind of tell me a bit about how like the Cove score works? I think that's something that's kind of like a unique feature that you guys have.
The algorithm, Cyril. How does it work?
It's a bit proprietary, but yeah, we collect these data from all these different integration and all these different providers. So we have like the credit score, the background, the payroll information, all those things. We put them all together and like have a bit of AI and a bit of like writing our own algorithms to figure out like a scoring system that would work. And yeah, put it all together, we get a score.
It's more so like this like tenure thing that's going to be formed over time. Like it's not something that is like the thing that you're taking to market, but it is like the big picture vision stuff. Is like if you could create like an alternative way of assessing people beyond credit, because like a credit score is just based off of your credit, right? So we're like, what if we just looked at every single other factor? Because Equifax isn't innovating. Like Equifax doesn't even have like an API for half their stuff. They have this thing called Metro 2. And like, we know that because we worked with them for like almost over a year now. And like they're very slow. Like these incumbents are not going to go innovator in like their core product offerings, right? So our like 10-year thing was like we can just redo like the way underwriting is done. But then the only way we can do this is by processing like enough applications across different use cases. So that's also why like we looked at different spaces, not just like tenant screening. We looked at tenant screening. We looked at equipment leasing. We looked at every single industry. Like a credit score would be impacted as well. But like the thing that we're selling today isn't like the Cove score. The Cove score is something that's going to be like a snowball effect over like the next 10 years. But the thing that we're selling today is like automating your standard operating processes, like very, very boring stuff that just makes money that carries you for like the next 10 years. And you actually end up making a lot of money off of that. And then once people start respecting you enough in the industry and they're like, okay, oh, you're using Cove, we're using Cove, whatever, then they start understanding, okay, maybe we can go talk to Cove for like figuring out what score we should put this applicant on. And then you don't even need to review any of these documents or any of that stuff. It all just gets calculated.
Something else that I was curious about is like you guys look at like the tenant's income or their like employment history. Like it requires a lot of data, right? So how do you guys kind of ensure that there's no like cybersecurity issues that come with that?
I'll just encrypt most of it and make sure all the connections are encrypted. Like there's just basic things that you have to do. Like, yeah.
He says it's basic because he worked at a YC company, but like to the average person, it's not very basic.
I mean, it's kind of basic. But the thing is, it's just like some startups would just be like, yeah, like let's ignore those things. But yeah, like as hacky as we should be, there's certain things we just do. Like, yeah, just encrypt, make sure like people can't like authentication is done properly, things like that. Yeah.
We're in like a co-working space right now, but like if you know Cloudflare, like Cloudflare does like their encryption based off of like lava lamps in their office, and like they have a camera pointing towards like the lava lamps, and the lava lamps are very unpredictable because it's not like computer generated encryption. So like once we get like a massive office space, we'll probably have something like that to like handle our cybersecurity stuff and encryption.
Yeah, I don't think we need that, but yeah.
There's a saying where I hear it all the time in like the startup space where it's like to like find the right solutions, you need to ask the right questions. So when you guys are building your product and in the process of like refining it, how do you guys know that you're asking the right questions?
I think it just goes back to like what else is in like this person's like life cycle, or like just and like understanding like what the process is for each industry. So like even for tenant screening, for example, right? Like you have to look at like the entire leasing cycle. Like what happens when a unit is empty, right? Or like what even happens before that? Like someone's living there and then they leave the unit, it's vacant now, and now it's vacant. You have to go list it. You have to go market it. You have to get more people through the door. You have to do showings. You have to go and like do the application process, which is initially where Cove started. And then you have to go put that person into the unit. You have to verify, you know, their insurance and all these other things. So there's a ton of different moving parts in this like industry alone, right? So understanding like the different moving parts in different industries was like step one. And then step two is like looking at initial entrant. So like we can't go and change the way leasing is done right off the bat. Like they're not going to trust us enough to do that, right? Because like early stage company, whatever, right? So you initially just go and solve for like one very, very simple thing, which for us was like tenant screening, right? But then once you earn their trust on that initial product that's like very, very simple, easy to understand, clear value proposition, then you start looking at other things across the rest of the life cycle. So going back to like the tenant screening life cycle, for example, you had marketing, you had all of these different things. One of the other key pieces was verifying insurance, like making sure this person actually has their tenant insurance, verifying that they're set up on the utility platform, right? And then verifying that this person actually, their like landlord lived in this property. It's not like a fake reference, right? So you start picking up on more things like that. And then you start applying like the stuff that you initially sold them. So we initially sold them like tenant screening, but we're like, okay, wait, we have the tech and the resources to go and like create and solve for these other like pieces in the puzzle as well. And now you're able to go and like sell them on even more features or even more use cases of like the existing product. And that ends up having more applications go through or like them using the product more, right? But if you focus like intensely on increasing like product activity and like making sure that like you're building a product that like they're actively using every single day, then like cool, you're gonna have a successful product, right? Like my thing is like the most successful companies out there are like the ones where like users are using them every single day. And like Facebook or like Snapchat or any of these companies, like they have so many users using them every single day to the point where they don't even need to charge like the end users to actually use a product like Snapchat or Facebook, any of this stuff, right? And part of that is because like the end users are like the product, like you're being sold advertising, but like they have so many users on that side to where like anyone would go give them like 10 or 20K to go and do an ad on the platform.
Mhm. All right. Yeah. What is Cove's unique value proposition that makes you different from like any other tenant verification software?
I think it's like the open data and like just like breadth of understanding of like different use cases and like looking beyond like background and the credit. Okay, like tenant screening has been around for like over 6 years now. Like this is not like a very new space. It doesn't have like a ton of like companies innovating in it. Everyone sort of has like the same like value prop to end users. But then like our thing was just like, let's look at beyond like what everyone else is doing.
I kind of want to now shift towards like the market and industry aspect. I know both of you have had experience in the past being like founders or just like working on startups. So I was wondering like now over the past few years, how much like technological advancements have improved and now with like AI, like how has the process of building a startup kind of changed?
That's a Cyril question.
Well, yeah, these days a lot of code, even that I write, is like written by AI. We have all these integrations directly in the IDE and things like that. So a lot of like we can ship out features a lot faster, even on the UI side. Like nowadays, there's like Adyan's a big proponent of like Bold. It's like you can just like come up with like prototypes like really quickly on the front end, especially. And so it's like a lot faster to get things done these days. Like, and even with like the whole process, like there's like startups just building things just that automate like the standard process we need to ensure like the quality of the code and things like that. So it's just a lot faster. I wouldn't say it's still replaced software engineers as of now, but yeah, I don't know if that happens. Like, yeah, like people can build faster. That's what's gonna happen.
I think it's like building faster, but I also think it's like iterating faster as well. Like when I first started the company, I would have to use like Figma mockups to like sell everyone. And like Figma mockups, they take a lot of time. You need to spend a lot of time like making sure everything works. And then you make the mockup, you make the UI, and then you have to go like prototype it out. And you have like, it's a lot of steps, right? And especially when you're just trying to iterate and like figure out like what an idea is, that's where like the front end like code generators like Surfer or Codium or Windsurf, right? Yeah, Windsurf come in or like any of these like different like coding IDEs is like I can just kind of go to it and just like prompt something in and be like, oh, I'm looking to create like an Airbnb style app that does like XYZ, right? And it won't have any backend code. It won't have anything that's like actually usable, but it's good enough to where you can actually go to a customer and like sell them on the thing and even maybe get a deposit from them and tell them like, hey, like we'll have this product ready in like a week or something, right? And then you just quickly rush, you build something for them. But like they're a lot more likely to actually give you cash for something that you've like prototyped with code rather than like a Figma mockup because they can't go click on the link. You can't really interact with it. They kind of know it's like a mockup or a prototype. But yeah, no, with like this AI stuff, it's like everything iteration, building, like all these different life cycles in like a startup, everything's like 10 times faster.
With it being faster, do you guys find that you can kind of focus on other areas more, like maybe marketing or anything like that, for example? Like, is that a benefit?
Or you can just build more. I don't know. Yeah.
You could build more. Like, I think it just like frees up like the amount of resources that like companies need. Like, I think over like the next 10 years, you're going to see more like smaller and smaller teams that are able to get like even more done. And like, I think there's going to be a point where like, if like any of this like AI agent stuff actually happens and like like they're good enough to like replace like people or not even replace, but just like limit the amount of people you need in an organization, you're going to see more and more like unicorns or like massive companies come out of like 1 to 3 person teams. Like there'll probably be a point where like everyone will actually have a business or like some sort of software business or some sort of thing because like work is already fundamentally changing. Like we're seeing more and more like gig work and independent work. So like having the idea that like over the next few years or decades, there's going to be more and more like small business owners, or like everyone has like a business or something that they're doing or selling. Like AI and like all this stuff just makes all of that stuff way more feasible. So like, yeah, like I think even like right now, like we're like closing some money on like a fundraise, and like we looked at like our key hires or any of that stuff, and like we don't actually need to make a lot of hires to get like a lot of revenue through the door. Like up until now, like I'd say like 95% of the revenue that we have had just came off of me like getting in touch with people and like pitching them, like showing them like this is what we're building. And like pretty much all of product development has been done by Cyril.
Right. So like a much lower barrier to entry. And then probably also the technical side, right? Like you guys mentioned, like a lot of people are worried about not having a very technical background and not being able to build their own products. But we could probably see like in the near future, like pretty much like you said, anyone can just start their own business with minimal resources.
Yeah, exactly.
Yeah, but I don't think that's an AI thing. It's just overall, like even
Like Shopify changed that.
yeah, like Shop that's like Stripe. Like payments used to be like a pain before Stripe. Like even for devs or something, you'd have to like I don't know. There's like too many processes. It's become so easy these days. And even like making apps. There was like Flutterflow, if you've heard of it. It's like you can build like full mobile apps just using drag and drop and stuff. And the code is not too bad. And like if you want, you could get devs and like build on top of it. Things like that. I think overall, yeah, it's become so much easier, and it's gotta be easier.
And I think it all just goes back to like democratizing access to like building in like any space. Like Flutterflow democratized access to like building mobile apps. At one point, like even Next Canada, their entire thing was like, we only accept entrepreneurs that are building like mobile app companies, and like they would only accept people that are building in mobile, because that's what was hot at that time, right? Just like a lot of VCs right now are like looking at like AI, for example, right? So now there's like a lot of like AI companies that their entire like value prop to you is like you can go and create like an AI agent in like a few minutes just by like typing in some prompts and dragging and dropping whatever, right? And like they are enabling more people to go and create in those spaces. And that's kind of like where we come in as well. Like we're enabling more people to go and create like fintech products or like fintech powered workflows.
Do you guys see any fintech and like real estate trends coming up this year that will impact your product?
I think fintech and like real estate has always had like some sort of relationship in like the past few years. But I think that like because of how slow and like how hard it was to like initially come out with these products, it was very difficult for like because like real estate and finance are probably the two of the slowest sectors that you can go after. Like it's very, very old money. It's very, very old processes. It's very like, this is how we've been doing things for the past 20 years. But I think a lot of our growth as well has came from like how slow it was before, and like how there's so many different companies that are like competing in like Plaid space, for example, like Plaid and Flinks, like all these different data aggregators. These are all like API based technologies, right? Where like you can go and like you can create like an aggregator, you can create like payment rails and all this stuff. But like because everyone was like innovating on that side, no one was really innovating on like the end users using the thing. Like Plaid or any of these companies, they're like value prop was like, yeah, you can verify information faster, you can do all of these things faster. Cool. Like the devs are super happy with that. But like, what about like the SMB, like property manager, or like the guy down the street who has like 1,000 units and he needs to rent out? Like, how is he going to use Plaid, right? And the thing has been around for a few years now, but I think because of like what we're building, we're going to see more and more people in real estate and finance and all this stuff using like fintech. But up until now, that was like the biggest barrier to entry, because like fintech is a very technical like background product, and real estate and all these things, like they're not technical enough. Like their core business isn't like creating these products. Their core business is like letting you into a house.
Yeah. Are there any challenges in the tenant verification space that a lot of companies like yours tend to face? And like, how do you guys deal with those challenges?
On like the technical side or like product side?
Could be either. Yeah.
Could be either. Cyril, what do you think are the biggest problems? And
I don't know. I don't think there's much technical.
yeah,
it's kind of fairly easy.
Yeah. Like that's what I said earlier. Like there's a ton of like tenant screening companies, and like all of them have just done like background checks and like credit reports and that stuff. And like that's like their entire space. I think the biggest problem in like selling in real estate in general, not even tenant screening, is just like the sales cycles were like incredibly slow, and like they still are right now as well. Like it's very much like who you know and like how you can sell to them and like what sort of relationship you have with them. It's very old money in that sense. So there's a lot of like closed door deals that like happen. And it's interesting because like if you look at every other space, there's not like a limitation to like entry. Like if you look at like AI or any of this stuff, for example, like adoption is very fast. Like everyone's looking to like adopt on that side. But I think because like real estate and this like entire legacy space industry has been overlooked for so long, a lot of like incumbents and like a lot of customers are sort of hesitant to like adopt new software solutions because the last time they saw any sort of adoption was like the dot-com bubble. Like they created a website or like they had like an online form or something like that, for example, right? So they're very, very hesitant to like adopting. So I think that's the biggest problem for any like tech companies in like real estate or finance. Customers are very slow to onboard, and then the other half of it is like their like stack is like very, very old. So like there's this company called Yardi, multi-billion-dollar company, still owned by the same guy, and we needed to access their API. Their API would only give us like the tenant's first name, email address, phone number, very basic stuff, right? Like stuff that you could get from any other API for free. They wanted $25K to get access to just like 4 lines of information, right? So that's how like old and like redundant and like very, very like gate kept this entire industry is.
Is there anything interesting you learned about renter behavior during your time building this product?
We see a lot of interesting characters, like
Yeah.
yeah. So
We see a lot of interesting applications come through the door. Like,
yeah,
I think like overall, like market wise, what I'm seeing is there's going to be less and less like long-term rentals, and like short-term to like mid-term rentals is like where it's at, because like over the next 10 years, people are not like, think about like your parents, for example, right? Your parents probably like got a house in Oakville or Mississauga or something like that, or like some sort of like suburban town. And then they went to downtown Toronto or like a big city to go to work, right? And that's how like work and like the future of work has been shaped for like the past like 10 years, right? And people usually live like away from work. Like you usually drive to work. Like saying to your kids and your family, like I'm driving to work right now is not like a thing that like, it's very common, right? But what we're seeing now is like more and more people are actually after like very midterm rentals of like, hey, I'm going to do like 3 months in Toronto. I'm going to do 3 months in like SF, for example. I'm going to do 4 months over here. And that's kind of taking shape like everywhere. Like the future of work isn't limited to like, hey, I'm going to go graduate from like, I don't know, U of T, and then I'm going to go work in Toronto for like 20 years and retire in Toronto and like have like a family, whatever, in Mississauga. That's not happening anymore. I think because work is changing, living is changing as well. And people are open to like just moving around a lot more as well. Like I myself I signed a lease, and like, guess where I signed it? I didn't even sign it with a real estate agent. I signed it on Airbnb. I got an Airbnb for like 3 months, right? And like I got the B&B because I was like, cool, like I know I'm going to be moving somewhere else after those 3 or 4 months, right? And it's like the same thing. It's like, we know that we're going to move. We know we're going to go around. And that's why like people can't commit to like longer lease cycles or any of that stuff.
yeah. I've already moved like twice in the last year. I used to move like every 6 months just for fun.
Yeah. So do you guys think with like you said, like people are moving around a lot more now, is there any opportunities kind of for your product in that sense?
Yeah,
Yep.
more people are moving around. More people need to be screened.
Need to be verified. Yeah. Well, some of our like big like enterprise deals that are in the pipeline right now are like short-term rental platforms, or like companies that like not even short-term like Airbnb. Like Airbnb is like usually from like 1 to like 10 nights. We're talking like midterm rental platforms that are like, and even like on the investment landscape, like there's more and more investors that are inclined to do like midterm rental properties rather than like long-term rental properties, because you can charge more, you can have better tenants, and like the life cycle of the property is a lot better because you're having new people in, new people out. You can charge higher. You can just set up the furniture once. It's not as regulated. Like the government won't like ask you for as much. You like kicking someone out of like a long-term rental is actually very difficult. Like the LTB is like backlogged a whole lot, like 8 to 12 months to actually kick someone out. But if it's like a midterm rental, then like you can just get them out like in a few days. That's like where sales and all that stuff is headed as well. Like we're talking to a lot more midterm rental platforms that are innovating on this exact side.
Yeah. I want to now move to the fundraising aspects. So, Adyan, I know you have a bit of experience like on the VC side. Do you think that's kind of helped you guys with raising funding at all, or how you approach raising funding?
No, 100%. Like that's why like I wanted to work in VC, because like I ran like 2, almost 3 like lifestyle businesses before that, and highlight on like lifestyle because like they weren't like venture scalable. Like we had like this first thing that I did in like high school, which was literally just like selling doorbells like door to door. And like we got like 50K off of that just like in door to door sales. It was like me and like 10 of my other buddies. We would go door to door and just sell like smart home doorbells from like Alibaba that we got for like $30. So So we did that, and like I kind of just got frustrated with like lifestyle businesses because I was like, dude, this is so much effort, and it's not like repeatable. It's not scalable. Like this doesn't make like a ton of money. Um, so that's why like I wanted to work in VC to like actually understand like the business models or like any of that stuff. But like I think working in VC is probably like the best sort of job that like either working in VC or working at a startup is probably like the best job you can have in your 20s rather than like being in like asset management or like any of these other like older spaces, because you understand what it takes to go and build like a company very fast. And you also see like brand new ideas every single day, and you get to keep up with all the trends as well. But like, you just don't want to get stuck into it. Like my whole thing is like, if we fail and like exit this company, I'm not going to become a VC. I'm just going to go do like another company. But if I fail, then I'm going to go become a VC and then just jump back into like startup stuff right after.
Has it helped with how you approach like pitching your product? Kind of understanding the VC side of it?
Yeah, because like every call I hop into, I'm like, I know what you're doing right now. Like I know the process that you're doing right now, and I know what to say to you right now to like get money. But like no, it's just one of those things where like it's like a hidden secret like of the industry. You go in, you make some connections. Like a lot of like my ex boss, for example, like first VC firm I worked at, like he's coming in as like an angel, right? And like those connections are incredibly, incredibly like resourceful. They're very, very valuable as you're building your company, as you're going off in like the rest of the world. Working with the founders is like one upside that you get, because all these founders are probably going to build like massive companies. And now you basically did like the screen, you did like the underwriting, you did like all of the valuation, all that stuff for this big company that's going to blow up. So you get like, amazing connections on that side. Like you might just know like the next Zuckerberg, for example, right? So you have that side, but then the other half of it is like just the people, like the LPs, the partners. Most of the time, these LPs and partners have exited companies of their own, so they have a ton of valuable wisdom to actually go and pass on to you.
What's your approach to kind of finding the right investors? Like, how do you know that this is the right investor that'll really help you grow your business?
I think it's the time of like your company, like what like life cycle is your company at? When we first started raising, we talked to a ton of VCs, didn't get exciting valuations, didn't get exciting deals. It was kind of just like sad. And it was also because like we didn't really know what we were doing. Like we were in tenant screening. We wanted to try out a ton of different things. Company focus was sort of all over the place. But at that time, the thing that was super pivotal was having angels, like really, really good angel investors that like believe in you as like a person, that have worked with you before, or like sort of understand like the space really well. And like they know you're cooking when you're talking to them. You just like don't know where to go. So like angel investors is probably like the best like VC to go to, or like investor to go to in the beginning. And then like obviously as you scale, like you'll find like the right VCs as you're like building the company and you figure more of like the thing out of what you're building. Like we had a lot of VCs that said no to us when we first started raising, and now we've sort of figured out like this like fintech Zapier angle. And like my calendar is like just getting booked up like crazy because they're like, what is this? This is really cool, like the brand new space, right? And like they also see you pivoting over time. But I think like before you go into like any of that stuff, like VCs or investors, any of that stuff, you should ask yourself, like, what do you actually need the money for? Like, what do you actually need this cash for? Because you usually only need cash when you're one, like you have like bills or something to pay, and two, like when you need to go and scale something out, right? Or when you need to go try something out. And like with how accessible and like easy it is to go and build a company today, you shouldn't need that initial like capital anymore to actually go and start something. Like you should actually just raise after you get like revenue coming in and like you have all these things like coming through the door, right? Because again, VCs are also like looking to make money off of you. So if you can like delay that, like taking capital time like as much as possible, and just figure out like a really good business model, a really good product, and a really good problem to solve, then like you can 100% go and actually build something like right after, and like you can get much better terms and much better valuations and all that stuff as well.
Yeah. Then for Cove specifically, when do you think when do you think it's the good time to start looking for VCs?
Yeah. We had to raise like some initial money because we just like needed to support like day-to-day operations, and we needed to like have some breathing room. Like we had revenue coming in through the door, but like you need breathing room in like the early days. We had like revenue, it was supporting it. We raised from like angel investors. We had like less than like a 250K round. It was a very, very small round of just angel investors, like people I've worked with before, like customers and stuff like that. And then we sort of came across like this existing problem, and now we've extended this round to like 500K and probably even like 1 million in like a few weeks. But like it's really hard to say. But I think for us, it was like we didn't want to rush the process. Like we had offers early on. We had like people we were talking to. The money was there. It was just like giving up the control and like the size of the company and all of that stuff. So like we really had to suffer in the beginning because like we didn't raise that VC money and like we were just relying on our revenue. But like that suffer and all that stuff like kind of paid off because now like you can walk into a room and you can tell them like, hey, our valuation is like 10 mil or like 20 mil. And like you can justify that with like product revenue growth, projections, like deposits, all that stuff.
For the future outlook, it's still very early in 2025. What are some milestones that you guys want to hit this year?
Cyril, what's your biggest milestone?
For me personally,
For you personally, with the company?
just like get some solid revenue, like that's like recurring and like we can rely on. So I think that's like the biggest goal. So we can like we kind of have product market fit, but we can be guaranteed that we have it for sure.
Yeah. Cyril's a very like scrappy guy. So he's like, screw the VCs. Let's just like build this thing on our own. Let's get to like $100 million. Like, you know, Zapier, right? Zapier, they didn't raise any money initially. They built a product. They found like PMF. They were like net profit. And then they raised $1 million from like Sequoia, like the top VC firms, right? They closed it at 1.5 million. They had offers for a lot more, but they capped it at 1.5 million. I think it was like a 20 or 30 mil like post money valuation. So they didn't give that much of their company. And then their next financing round was led by like, I think Sequoia or something like that as well. And their next financing round was like, I don't know, it was like 45 billion or something like that. It was a crazy number like that. And they literally just focused on like solving the core problem, having a really good business model and all that stuff. And they only had 2 financing rounds. One was like their seed round for 1 million. And the other one was like for a few billion, right? And that's like pushing them closer to like profitability. And they're like at like, I don't know, 250 mil plus in like revenue in like an average year. So like companies like that are like super inspirational for us to like look into because it really focuses on like solving the core thing, which is like product market fit and hard revenue that is reoccurring.
And lastly, to wrap up, I want to ask both of you, what's the most rewarding thing about being a founder at the end of the day?
What is
I'd
it?
say like I can have a direct impact. Like if I'm working in some large organization, like yeah, sure, like whatever I do somehow in the abstract contributes to the company. But like here, I know exactly if I'm doing something, putting in like a few extra hours, like it actually affects, and like we know that it's going to affect something, and like I feel like we're in control. I think that's
like every decision that we make is like it could be like the death or like the exit to the company. So like every single decision you make like actually matters versus like Scotiabank investment banking. Cool, looks really nice on paper, but like what do you actually do every day? Like how consequential are you to the company, right? And like how much of a direct impact can you have? And like I don't know, my thing like early on, like after like we went through Next, like I kind of learned this from Next was like the metric is never like money. Like there's better ways of making money than like running a startup. Like my eyes have like bags underneath and like I'm very tired all the time. So there's better ways of making money than doing this. But like you're not going to learn as much. And like learning only comes from like making those consequential decisions. Like Cyril said, it's like you can only go and like learn as much as like you're in control of and like as much like autonomy you have over your decisions, which is why like even with us, I do all my stuff on the business side and he trusts me to make all the best decisions on the business side. And then I trust him to make all the best decisions on the technical side. And we're both sort of held accountable by like, okay, we'll have like rent money at like the end of the month to like pay, right? And like that's like the trust of the company in it.
So it's really just about being able to like actually make an impact.
Yeah. And like being very, very responsible for everything you're doing. If you're not responsible, then you can't do a startup.
And learning.
Learn
quite fast.
Good to learn.
Absolutely. Yeah. So yeah, thank you guys so much again for joining the podcast. For anyone who wants to find you guys or kind of keep up with what you're doing, where can they find you?
Instagram, like cove.rent, and then we both have LinkedIn.
Yeah. Thanks.
Cyril, do you have a Slack or like a Medium they can follow?
It's okay. I don't post anything. I'll
I'll
post something later. Yeah. LinkedIn for now. Yeah.
Yeah.
Great. Appreciate you guys for coming.
Sweet. Thanks.
Yeah. Thank you. Thanks for having us on.